Alrighty, what's going on, guys? Edward here, back with another video, and this is gonna be part two of this series of three videos that I decided to make just to explain okay, this ICT entry models, probably a couple of examples that you can use, okay, to improve. If you're watching this for the first time, I recommend you. I'm gonna leave a link right here at the top right corner where you can actually watch part one. If you haven't seen it, go ahead, watch it. Once you finish that, come back to this one, and then of course the next one is going to be coming on later. So uh, let's get started. Right here, I'm gonna show you an example on gold, and gonna be pretty much hopping on from here. And if you saw the previous video, sometimes we're gonna have markets that are just moving sideways. Again, you probably may not have an actual clear bias, right? Because what can you see here? The market is just ranging, right? Gold right now, we're moving sideways, right? For a few days, probably for about a week or so, right? Now, what's the first thing I like to do in the morning is just mark up the most recent highs, okay? Understanding the time, okay? What time is it? Is it New York session? Yes, New York session is just opening. Okay, so what are the things that I need to mark? Well, I'm gonna mark up, of course, this recent low from Asian session, I believe, midnight. Yeah, that was Asian session, and this relative equal highs right here during London. So I'm gonna mark up this buy side liquidity and this sell side liquidity. At the moment, I don't know what I'm gonna do. I don't know if I'm gonna buy. I don't know if I'm going to sell. At this point, all I know is that, okay, I'm just going to mark up this most recent high, this most recent low. Let's see how price reacts to it whenever it gets to this point, you know. It may not even reach this zone, right? Or this zone, but whatever happens inside here, I'm going to try to make a decision, okay? I'm on the 5-minute time frame, okay? I'm going to show you again more scalping scenarios. My favorite time frames to trade are normally, or to find an entry, to get an entry, or to actually make the entry directly on the time frame is the 5-minute time frame, my favorite one. Sometimes I go to the 1 minute. I just think the 1 minute sometimes is just way too, maybe too choppy. It has a lot of noise. So it's under certain circumstances I might actually go to extreme circumstances where I might go to the 1 minute. But ideally, 15-minute, 5-minute is normally the best. When we're having, for example, again, a condition where you see price moving sideways, you really don't need to have a bias. You really don't need to watch the higher time frame, what the daily time frame is, what the daily bias is, right? Because you already know it's just choppy as hell. Probably it's not going to go anywhere. Maybe it's going to drop back down, and then later it's going to push back up, right? So we don't have a clear bias. So it's fine. We're going to trade based on liquidity. Now that I have the time, now that I know that I'm going to be looking for an entry within my time, within my hours, which is New York session, I'm going to wait for liquidity. I need to see some sort of liquidity being formed. And then after that, I'm going to look for the next thing, which is a change in the state of delivery, breaker, auto block, fair value gap, all of that stuff, right? So let's wait. Let's wait right here and see what the market is going to be doing. Paying attention. Looks like price is trying to push up. We see price sort of having an impulse right now during New York session, pulling back. Let's see if it's going to go towards uh, those highs. Okay, so we see price is taking a previous high. We have a break of a structure to the upside. Okay, let's see if we're going to go for this liquidity, and then we probably can sell. All right. Okay, I want you guys to pay attention because at this point, look at the impulse, right? Recent impulse that we had a correction, another impulse, and it looks like it was trying to break below, but we don't have a closure below. So probably it's just inducing people here to sell, and now maybe it's going to try to push back up. So let's see. In case to understand right here, If we have a candle closing below right here, this is going to be my change in the state of delivery. If we have a candle closing, is this candle closing below? No, not yet, right? So let's see what's going to happen. Let's see if probably this order block right here with these two candles is going to hold the price, right? This order block is going to hold the price and push up. Boom. What do we have? Failure, right? This order block is not working, is not holding the price. It got broken. So what do you think that's called? A breaker block, right? We do have an order block that got broken. Now we have a breaker block. We do have a market structure shift in here. But where is the liquidity? Right? Where is it? Right here, this recent high. We just swept a recent high. We just swept buy side from here. Price still, for some reason, is failing to continue pushing up higher. I don't care. What I'm seeing right here, it's already a shift in the structure. It's a pattern, right? The price was trying to push up. And then all of a sudden, fails, right? This is the failure right here. This candle closing below is confirming the failure to continue pushing up. So it's telling me that we're probably shifting to the downside now. Maybe this is the actual draw on liquidity. That low right there is telling me that probably this is where it wants to go. Now that I'm seeing the shift in the structure, okay, this change in the state of delivery right here. So what else do I have? Do I have a fair value gap inside? I don't see there is a fair value gap inside. Unfortunately, there's nothing. However, I can still try to take the sell. Why not? I can still place a sell limit order right here, probably placing my stop above the swing of the breaker, this swing high right here, probably above this area, like that, or go safer right here. Okay, you might be wondering, oh shoot, that risk to reward sucks. Yeah, probably sucks. This is why we can use the Fibonacci. We're going to go from the high to the low of this last manipulation move. We're going to say this is the last leg, right? The last manipulation leg. So I'm going to use from the high to the low. I'm going to go in projections. And here we go. I'm going to try to target at least probably between 2.5, somewhere here. If there is some low, old low, that is probably sitting in there inside between the 2.5, I could probably target that, you know. And now the risk to reward looks a little bit better, at least a 1 to 2.6. So all right. So the main target is, of course, this low. Probably after this low gets taken, I can put it on break even, right? But let's see. Let's see if it gets activated, our entry right here. Hope you understand. What do we have? Do we have a change in the state of delivery? Yes, we do have a change in the state of delivery. Do we have a breaker? We do have a breaker, order block as well, because this series of candles, up closing candles, when it broke, this candle, when it closes below, that validates an order block. It creates an order block. This whole series of candles is a bearish order block. It would look like this. This is the first bearish order block that was created, right? So I'm placing my entry right here. Sell limit order, stop loss above this high. Remember, you can put it here if you want to have a better risk to reward, 1 to 5. This would be a 1 to 5 risk to reward. All right, you can play it here just to go safe, okay? So let's see what is going to happen there, if we're going to get activated or not. Okay, so price trying to pull back. Okay, there we go. It's tapping the breaker. And now we're having that displacement. I like that as soon as it dropped, we created a fair value gap. That's good. These fair value gaps can be used later for re-entries. You can actually re-enter here. After this closure, this is, by the way, known as a propulsion block right here. We just had a propulsion block created right there. Let's see if we're going to continue displacing to the downside. Getting back up. Okay, so this is what's happening. Price just swept this liquidity. As soon as that liquidity gets taken, you take partials and you move your stops to break even. Price is trying to come back up. Let's see if it's going to get us out on break even. Okay. No, it went directly to the target. So now it's taking that low. From there, That's another story. I don't care. No, I already took this beautiful sale. I could be looking for buys from here after this liquidity gets taken. I could probably be looking for the same thing, right? Change the state of delivery, breaker block, order block, fair value gap, yada yada. But just in the opposite direction, now probably targeting this highs if I wanted to. But guess what? With this one, I'll be more than satisfied. I'll be out. I'll be just, that's it for me. I'll be calling it a day. All right. But I hope you guys understand right here what I just did right here in the middle of these two highs, this low and this high, and not knowing what the bias is, not knowing. I'm just taking action based off of the recent information that I just had here. Price was trying to push during New York session, and recently we had a shift in the structure. Ideally, I would have probably rather, this maybe was not my A plus setup because I did not have a unicorn. I would have rather, to be honest, for price to take this high right here and probably shift after that. Probably that would have been a lot better. Probably my A plus setup would have been somewhere above here, but we did not have it. Right? This is what we had. Do you want to take this entry? Can we take it? Yes, we can take it, but probably maybe not risking what we normally would risk, like risking that 2%, right? That entire 2% risk per trade in this particular trade. Maybe not, maybe just risking just 1% because I didn't have my fair value gap within the breaker. I didn't have my unicorn, right? The market did not took this high right here. It did sweep this recent liquidity, which is okay. And we did shift the structure, right? Very important. Liquidity taken and then shift in the structure. This is telling me that we're probably going to go at least towards this low. Don't be surprised that as soon as the price takes this low, price reverses back up. Yep, it can totally happen. You could actually have a change in the state of delivery now right here, price pushing up. Where would the change in the state of delivery be, by the way, if we wanted to buy? After this liquidity was taken, if this candle, we would have get maybe another candle closing above this high, that would have been a change in the state of delivery now back to the upside. So the price could have done maybe that shift right here, probably break and pulling back to a breaker, and then boom, we could have gone there. But you see the price try to push, but never went to this high, never closed above the high. So we are okay. The price is still bearish, right? Continue. So hope it makes sense. Let me see if I can get another example. This right here is, we're still in gold on a 5-minute time frame. New York session is just opening and same thing, same story, okay? Let's suppose we're choppy right now, choppy, chop, chop, chop. We don't have a clear bias. We probably are going to be marking up this recent high and this recent low, okay? That was just created overnight, right? During London session, I see this double top. I like that double top right there. When I see, and based on ICT concepts, when I see a double top, I love to target those things. I know there's liquidity, a lot of liquidity above that. So I'm trying to target that. Okay, so that's a nice buy side that I'm going to wait for. And this is a good sell side liquidity right here. So I don't know what's going to happen. All I want to see is liquidity, some sort of liquidity being taken to whatever direction. So let's see what's going to happen. We're still within this whole range right here. So it looks like price is trying. Look at what is happening right here. Did we sweep this liquidity? No, we not. We did not sweep that liquidity. We swept probably this little internal, right? Sell side. However, we just created a relative equal low. I personally don't like this. I'm going to show you this example because I personally don't like this type of setups. I don't like them. But I want you to understand that whenever we are trading ICT is based on liquidity. We do not trade double bottoms, double tops. Like when it comes to retail traders, right? Normally, if you're a retail trader, you are buying the crap out of this support right now, right? When you see that this engulfing right there, you're trying to buy, you place the stop loss below the low and you target highs, right? Or same thing here. If you're trying to sell and you see this support, this resistance, when you see this bearish engulfing, you're selling from here, you're placing the stop loss above and you go short, right? So we are not doing that. Based on ICT, we're going against that. We need to see a liquidity sweep. However, look at what is just happening right now. Price try to go down, all of a sudden it stop abruptly right here, and then boom, pushing up. What do we have? This candle closing above is giving me a change in the state of delivery. We could probably assume that yes, okay, we took this internal support right here, this internal liquidity. We did not go for the external liquidity. So we swept the internal, left open that sell side liquidity, and we just now broke. So we do have a change in the state of delivery. I'm like, oh man, I don't like this type of formation. Probably I would let it go. Um, Let me see. This would be my market structure shift. This would be the breaker. You see these two little candles right here. That would be the breaker block. So do we have a fair value gap? Let's see if the next candle forms a fair value gap. No, we don't have a fair value gap inside the breaker. So unfortunately, it's not a unicorn. But let's say we took the buy anyways. Let's say because you had that fear of missing out, you didn't want it to let it go. So okay, let's say you enter right there. You place the stop loss below the breaker, below the swing of the breaker, which is I'll probably place it below here since this is the actual refined order block, breaker block in this case. So I can place it here or I can place it all the way down here, right? So I'm going to try here to probably get the best best risk to reward, and almost a 1 to 2. But I would not, I'm telling you, I would not be, probably, I would not be taking this position because I have that double bottom right there. I know that the price will eventually come back to this lows to take this liquidity from here. So as much as it looks probably nice, yeah, it did sweep internal liquidity right here. I'll be very concerned about this double bottom. So probably I may not take it. Yo, almost almost getting out right there, but it was able to hold. You see the breaker hold the price did go actually to that liquidity at the top, so we did ended up sweeping buy side right now. But i I want you guys to see what actually happened later, because when I say eventually, when you see a double top or a double bottom, price will eventually come back at it. Maybe it's not going to happen now, but the algorithm is going to bring the market to that zone eventually. Like you see, price on the next day, it was coming down. It created another relatively low. This was a very strong support right here. There was a lot. You see, it even induced buyers right here. It was inducing buyers to get in here, probably something like this, go along like that, and they place this stop loss here. They're very happy saying, oh yeah, this is a nice support right now. So they're buying and boom, price is taking that liquidity. So this is why I would have probably not taken this position because of that. Okay. Did we have a change in the state of delivery and a breaker? Yes, we did have that. Did we have a fair value gap inside the breaker? No, it was not a unicorn. We did target the opposite liquidity, which was this high right there. We were on a 15-minute time frame, on a 5-minute time frame. I'm sorry, the entry was spotted on the 5-minute time frame. So you see, hope it makes sense. When is a good opportunity? When is a good example? When probably is not an A plus setup. This was not an A plus setup at all. I would have not taken this trade for sure. But I'm just showing you here what are the scenarios, and probably the chances for you to win this trade. What were the chances, right? It did sweep liquidity though. So we did spotted liquidity. It did take the liquidity. The only thing I did not like was the double top. That double bottom right there, creation of that double bottom, that's a no-go. We did have all of this, except the unicorn, right? But we did have all of this in that formation. It did play out though. So you see, hope it makes sense. So for this video, this is basically it. Let me know what you think, guys. Please subscribe if you're new. Remember to watch the previous video before this one. And let me know in the comment section if if you're still confused, you want to see more, and I will be more happy to give you a response. So see you guys in the next one. Take it easy.